because that's the way we grew up, and that is how I became sexually attracted to your mom. And welcome to the Investor Shed podcast. I'm Nick Beveridge, your host, here with Jeremy Kitchen.
Good morning, world and America, both of you.
Yeah. Hopefully everybody had a great Thanksgiving.
Yeah.
And by the time you're hearing this, Christmas.
Yeah. Or it could be 2027 and the world could be done.
Or you're watching live, and right now it's December 2nd.
Right.
We're all over the place, guys.
Those are your choices. Just pick one. If you enjoy listening to us, please listen to us whenever you feel comfortable doing so.
Yes. Hey, Jeremy, I've got a good topic for today.
I love it. What do you got?
Now that we're past the election, people are feeling, in general, I think there's a lot of, you're either optimistic about the future or you think it's going to be a version of Handmaid's Tale.
Right.
But let's stay on the optimistic side if we can.
Sure.
And say that in general, things might be better from here on out.
Okay.
For the economy.
Sure.
But I want to point out some things. If you're a real estate investor and you think that the election just made everything easier for you, I think you're in for a reality check, hence the board.
Nick spelled it very, very wrong, and that's what's comical, so we left it.
Yeah. And I'm not saying I'm against what happened at all.
No.
I'm a fan of this new administration and what they're doing. I just want to throw some common sense out there when it comes to how real estate markets work, how interest rates work.
Yeah, that's very important.
How being a real estate investor works. And if you have very little experience and you're just relying on the government to take care of you, you're in for a disastrous reality check.
Yeah, better have another plan in place for sure.
Yeah. So let's get into it,
Okay.
Jeremy. When you think about real estate and you think about how difficult this market is, what is making it difficult?
I think, Nick, what you're talking about, what makes it difficult are the things you kind of alluded to earlier. You got your high prices, you got your high interest rate, normal job infrastructure can't really support the average median price range right now, if that makes sense.
Right. So average incomes can't really afford the average house, which that might change. That actually, I'm optimistic about that. I feel like the average incomes may go up.
Sure.
Because I don't feel like prices are coming down.
Right. And that's what inflation is at that point, right? Because, we're talking about the inflation rate. If prices go higher, and you're not making any more money, inflation goes higher.
Yeah.
But if you make more money while that goes up or at a higher rate than, prices raised, then inflation's down. Is that correct how that kind of works?
Well, let's not get the two confused.
Okay. Yep.
So high prices are a result of inflation.
Right.
Inflation is when you increase the money supply. And everything in markets is about supply and demand.
Sure. Yeah.
So when you expand the money supply, which Donald Trump did in his first term by a lot of it, is COVID driven. So you can throw all the excuses you want out there. But the fact is that the Fed's printed like 2/3 or something like I forgot the amount, but it was an insane amount. It was like a third of the. I think it was. Somebody correct me if I'm wrong. Like a third of the entire money supply.
Yeah, I believe it, honestly. I mean, we saw a huge...
that was just printed and stimulus, and there was all kinds of programs for businesses, and it was designed to try to help not make the whole market collapse because like everybody just stopped working.
Yeah.
So maybe it was needed in some cases.
Yeah, I think that what you're saying, like they wanted to, boost small businesses specifically.
Yeah.
There were a lot of perks for being a small business owner back then that kind of help you keep your pulse going, if that makes sense.
But for the people that don't really know how the money supply works or how inflation actually works, they just said, we didn't really have inflation during those years, but we did. We inflated the money supply, and that's what inflation is. That's when you create more money. High prices are a result.
Yes.
It's an after effect of increasing the money supply.
Right.
Which we had during the Biden administration by a lot.
Yeah.
It was actually a result of all the money printing.
Sure.
And all the stuff that happened during COVID. And naturally, like just, since the early 70s, we've been having consistent inflation and prices going up because our money supply used to be backed by gold. And then it turned into a fiat currency.
It did.
Thanks to Nixon.
Yep.
took us off the gold standard. So when you used to be able to redeem your U.S. dollars in gold, now you can't. It's backed up by the promises of the U.S. government.
Right, that's
that
exactly
it's
what
worth
it is.
something.
You can still use your dollars to buy gold,
And that's-
but you can't do a one-to-one exchange. It's not like
And that's why the dollars say promissory note
Right.
on it. It's like, hey, we promise it's worth something.
yeah,
But you got to understand how the money supply works and what creates high prices.
Sure.
Inflation does kind of inflation creates the high prices that come later, but
Right.
it's not the same thing.
Right.
High prices doesn't mean inflation.
Right.
It's a symptom of.
it's kind of like a cause and effect, right? So since like the money was injected into the market like this, eventually like you're going to see everything kind of go up with that because there is more money to spend on these things.
Yeah. Now, the thing that kind of could counterbalance that would be the population. If the population was rising with the money supply, then we don't really see prices in general go up as much.
Okay.
That's a theory. Maybe it's wrong, and it's so hard to test
Right.
because we have so many undocumented people in this country too that don't always make it to those numbers of like how many people are actually in this country. But
Right.
in general, it's all about supply and demand.
Right.
And with the housing market, it's the same thing. It's like you're not just going to see prices start dropping unless there's an abundance of supply.
Right.
But we are starting to see supply go up. We're starting to see it go up a lot.
Okay.
It's not at a point where it's going to yet cause prices to come down. It's just getting to a point where it's almost like you're restocking the shelves.
Sure.
And we've talked about this analogy before, but like for the last many 6-7 years, we've had 6 months of supply in the real estate market. Let me go back a little further. 6 months of supply is average.
Yep.
That's about what you want. So think about having 6 shelves in a grocery store on the aisles, and at the current rate of absorption, like how many people are purchasing. You typically to have a balanced market to where it's not really in the favor of a buyer or a seller.
Right.
If you had 6 months of supply, meaning that if no other new supply came on the market, it would take 6 months for all those shelves to be sold out.
Sure.
And over the last decade, you've seen that supply number come down. So almost every year you go to the grocery store, you're seeing like another shelf is gone.
Right.
Another shelf is gone to the point where, right after COVID, you only had about 1 shelf out of 6 that had supply.
Right.
And you had an abundance of money
Right.
for people to go after it and low interest rates and a huge demand.
Right. Oh yeah.
Now, I remember when I got into real estate, we had a huge supply. When I got into real estate in 2011, the start of 2011, I was working in Florida, and we had more than 10 months of inventory in almost all price ranges,
Yeah.
meaning that there was an abundance of supply. It was falling off the shelves. It was going bad, and not a huge demand.
Right.
Interest rates weren't like really they were kind of low, but there weren't a lot of buyers just rushing and grabbing everything.
Yeah.
Because real estate wasn't as hot or desired back then.
Right, and I think that part of that's kind of the backlash after the 2008 recession, as they call it,
Yeah.
the Great Recession, not
Great Recession.
not the Depression, the recession. Some of that's kind of the fall off of that because when the market fell, it took a while for it to build itself back up, and it took a while for consumer confidence to actually realize that real estate is actually going to work again.
Right. So right now, in our local MLS in North Idaho, if you look at our most recent stats from November 2024, the entire MLS had 4 months of inventory.
Okay.
So we're starting to see that creep up from its lows. If we looked at, yeah, 2023. Actually, it goes in waves with the seasons, but in general, you're seeing. Look at this trend line. You're seeing this go up, right? So
For anyone that can't see this because
Yeah,
we're not
you
sharing
can't
our
see
screen,
this.
basically, if you know anything about markets, it goes up and then it goes down a little bit, but then
With
it
the
usually
seasons.
goes up a little bit more, and that's exactly what happened, and then it goes down. So it just kind of rides a wave up, but you still have your valleys and dips, of course.
yeah, and in general, minus the last 2 years, When I kind of started tracking these numbers and publicly sharing every month with our real estate investor group, I was showing back then there was about 6 months of inventory. And every month it seemed like it was slightly getting smaller, getting smaller. And it was on a wave downward until, the peak in 2022, early 2022.
Yeah.
And then our inventory has been on a wave going back up. But it's still not at levels like we're technically in a seller's market.
Sure.
Because you still have less inventory than what demand is feeding on.
Right.
But you got to keep this in mind that in order for prices to come down, we have to have an abundance of inventory, more than 6 months.
Yeah.
In general.
In general, right.
Yeah.
Okay.
Which could take a while to happen. I mean, this took 2 years to go from about 2 months of inventory to 4 months.
Yeah.
So real estate in general moves slow.
It does.
Now, here's a big reason why the market wasn't flooded with inventory. Sellers don't want to sell
Yeah.
because they got these incredibly low interest rates that they need to hold on to, because if they were to sell and move into another house, they're going to pay double the interest rates in most cases.
Yep. Double the interest rates. Not only that, but like almost double the price in a lot of places too.
Sometimes double the price. Well, they can sell their house,
Right.
For much more than they could ever imagine. But the house that they have to buy to replace it's not like for like anymore. Like in the past, when I've sold real estate in the past, most times it just didn't matter. Because if people were, even if they're in a down market or an up market, if they were trading, they were trading.
Right.
So like, I remember when I first started in real estate, I sold this house. This couple was losing like 200 grand on this house, and they didn't really phase them much. And I couldn't figure out why. It was because they were buying a property.
Right.
That lost like 500 grand in equity.
Yeah.
So they were getting a huge discount on the property that they were going to buy next. And it's like, it didn't really matter to them because they were just trading. It's
Right.
like moving their money from here to here, their equity from here to here.
Right.
And they were actually getting a much bigger, nicer house that was discounted even further than what their house was that they lost. So back then I was like, oh, I guess it doesn't matter if you're trading.
Right.
If you lose money on one property and go to the next that you're getting a huge discount on.
Just run your numbers accordingly, of course. And like what you're saying, like that doesn't really work in today's market. Like,
no.
I mean, unless you bought super duper duper well, which, some people who bought in 2021 or 2020 did buy pretty well. But even like if you took my house, like we bought it for $303,000.
Yeah.
It's probably worth like $425, $450 today.
Yeah.
If we sold it, we'd have 150 grand of equity that we could use to buy something new. But prices today are 550 for the median, right? So if I put 150 down, I still have a $400,000 mortgage at a higher interest rate.
Right. And have you done the math? 400 grand?
No, but I'm assuming that's going to be, I mean, our payment right now is like $1,700.
Like $3,500.
Yeah. I was going to say almost double.
So yeah, get this. You trade like for like house. And this is realistic. We're not exaggerating.
Yeah.
Jeremy's mortgage is what again?
$1,700.
You're $1,700. You got a 2,000 square foot kind of newer home in Rathdrum. If you were to go buy the equivalent house, sell yours, you got 150 grand to play with. You put it as a down payment on you would spend about 550 on a similar home.
Yeah.
So then you have to get a mortgage for 400 grand. Guys, do the math. 6.5% interest rate, $400,000.
Yep.
You're looking at around $3,500 after taxes and insurance.
Yep.
So you trade a like-for-like house, and your payment goes from $1,700 to $3,500.
Yeah.
So why would you ever sell your house?
Precisely.
Now, what if you kept your house? Kept it as a rental? How much could you get for rent?
In that neighborhood, probably 21.
Yeah, maybe 2,500.
Yeah, that's pushing it. But yeah, I go on the conservative side.
Okay.
Rents have gone down for sure lately. I mean, last year they were up really high, and they've kind of subsidized a little bit.
Yeah.
I would just imagine 21, 22.
Yep. So, okay. So you keep your house as a rental. You cash flow like hardly anything.
Yep.
After expenses and CapEx, and you're figuring for that and management fees. Maybe you're breaking even right now.
Right.
And then you're going to go buy something that maybe you'll spend close to $4,500 a month if you buy something equivalent.
Right. Because I'm not putting as much of a down payment down, right?
It's like, man, how do you make this work?
Right.
And that's what most people are having a problem with. And that's why you're not seeing many homes come on the market unless people are like moving out of state.
Right.
Or they're just going into a rental.
Right.
Because rentals are, they're not priced at what a mortgage is right now.
Right.
Now that could all change over time.
Right. And it's funny, like I always do this with the market. Like I'll find like a random house in the MLS and I'll be like, okay, I want to see what this looks like as a rental, just based off these MLS prices, right? So I start putting in my numbers and I'm like, okay, I could rent it for, 22, 23, kind of like what we're saying.
Yeah.
If I have a mortgage on it for 46, I can't lose double, unfortunately. And that's where it's like, we're not stuck. Like there's still options, but it's definitely harder to do.
Absolutely. So what can you do, especially if you're in North Idaho, like in this kind of market? And let's say you don't have a house right now.
Yeah.
How can you like make sense of like buying something that just costs so much money that you're not even going to be able to rent out?
Yeah.
Unless you're just making all these wild assumptions that interest rates will go down sometime, and they may.
Right.
But like you can't just rely on assumptions and future things to happen.
Right.
You got to make sure the deal makes sense right now. So, I mean, there's 40 multi-family homes on the market right now in our North Idaho region, or 40 multi-family properties. Let's see what, if we look at price per square foot and organize it by that and try to get the cheapest price per square foot. Okay.
Holy moly.
So right now, if you're in Priest River, I would look at this fourplex. There's a fourplex for $450,000. It's got 3,300 square feet. It's on a big lot. If you're in a rural area, like in North Idaho, maybe check out this fourplex. I actually know this one. Right now, it's bringing in about $3,600 in income. You can make small improvements and maybe get that thing to cash flow while you live in one of the units.
Sure.
Or help pay for most of your mortgage.
Where does it say it's 4 units, by the way? I'm sorry.
So it doesn't say right there, but I'm
you've
just
looked at
aware
it
of
before? Okay.
But you click on it, and then you can see total number of units
There
right
it is.
here.
Okay. I just wanted to make sure I wasn't missing anything.
Yep.
Okay. Well, yeah, that may work. It was built in, what, 1930?
Built in the 30s.
Yep.
Yeah, so you got to sacrifice a little bit there. But let's say you want to be closer to Coeur d'Alene. Here we go. Miller in Coeur d'Alene, there's a 3,100 square foot bank-owned property.
Ooh.
Ooh, yes. This has been on the market for 20 days. I wasn't even aware of this.
It's a duplex?
This is a duplex, yeah. Duplex for $624,000. Now the numbers start to probably make a little bit more sense. If you can rent out, there's a 4-bedroom, 2-bath, and a 3-bedroom, 1-bath.
Okay.
Maybe you can live in the 3-bedroom, 1-bath, and try to rent out the other. And this is where you can try to subsidize most of your mortgage while you're living and trying to figure out the rest. But it's all about trying to manage your cash flow, right?
Yeah.
Cash flow is like one of the most important things. It's a bank-owned property, so maybe you can get it for less. But you got to just start hunting for deals. That's what you guys got to do.
Yeah.
Hunt for deals, because the deals out there do exist. They're rare. You just got to become a good deal hunter. And I believe you should just focus on saving money. Now, interest rates suck. But what doesn't suck is homes that you can buy with cash.
That's true.
Now, that sounds wild, maybe. Like, wait. Hold on. Why?
Yeah.
Because you can still get people to buy your house.
Right.
You can still get loans eventually. You can get collateral loans. But how am I going to buy for cash? Just focus on something else for now. There's so many different opportunities in this market where you can start a business and you can make $300,000 a year.
Yeah.
Like sometimes your first year. I've seen many entrepreneurs that have a lot of hustle that are willing to just get out there and grind and build some sort of small business when it comes to anything like pet removal. Not pet removal, but pest removal.
Yeah.
Drywall companies, window installers, just doing something in the trades is usually the easiest thing to get into because there's so much demand for it here.
Or even snow removal or like something like that.
Removal, yeah, just something like where you think, gosh, well, when I was a kid, I made $10 shoveling a driveway. How am I ever going to make money like that? Well, just think bigger.
Yeah, you have to businessize it.
Yeah. But you got to start thinking how can I make this work with math?
Yeah.
The more cash you put down, the more things are going to cash flow.
Right.
In general. Or look for and hunt for deals.
And the less leverage you'll end up being, the more cash you put down.
Yeah. Or
So-
look out of state.
Yeah.
But maybe buy your primary home here and then you're shopping in other states.
Yeah.
I mean, there's still plenty of markets out there where you can buy cash flowing assets that need heavy management. Typically, like there's really no shortcuts in this world. But I want everybody out there who hasn't yet made the jump into real estate, but you really have the want and desire to not give up on your dreams,
Right.
but just anticipate things to not be so rosy.
Yeah, for sure.
Like they are not as easy as they used to be. But little secret, they never worry. It never was easy. It was easier, but it was never super easy for people to get into real estate.
Yeah.
I remember when I really wanted to get into real estate before the crash, I couldn't afford a house in Post Falls, so I had to go out and move to Kellogg.
Yep.
And I bought a house out there. Not a wise choice, but I had to do it.
Right.
I could have stuck with it and been fine, but like I eventually let this house go that I tried working on for, I worked on it for a year. I tried to rent it out for a year after that.
Yeah.
Finally rented. The market collapsed. It wouldn't cash flow.
Right.
And I eventually did a deed in lieu on it. That was my first property.
Sure.
I learned quite a bit about the process. But if I was able to just hang on to that house and like just make more income, focus on making more income to help pay for things. And if I would have kept that property, it would have been perfect.
Yep.
Everything makes up in the long term. Real estate is very forgiving.
Yeah.
But what are your thoughts, Jeremy?
I think that's really good. I wanted to bring up, so, obviously what you talked about, you bought a house in Kellogg, right? I want to talk kind of just about standards of living today. Like, is that something that you could convince your family to do, to move to Kellogg in a kind of a fixer-upper house?
If we had to.
Yeah. You think your family would be on board?
Yeah, I wouldn't be on board.
Yeah, exactly. But that's your standard, right? And that's why you make other things happen.
Yeah, so, they may not have a choice. There may be some pushback. Maybe my wife would rather get a job than move to Kellogg.
Sure. Yeah.
If it got that rough. So I want people to know that they don't feel like you don't have any other options.
Right.
If you really don't want to live somewhere, don't live there. I wanted to live in Kellogg because I thought I needed, at the time, I'm like, I really need to learn how to sell shit.
Yeah.
And what better place than Dave Smith Motors?
Right.
In Kellogg, Idaho.
You were in your backyard to go sell, yeah.
Yeah, it was like the stars were lining up for me at that time in my life where like, hey, I'm young, I can buy my first house out here, and I can work for this place that's going to train me how to sell.
Yeah.
Why not jump on it?
Yeah.
So I decided to do that, and I learned some incredible sales skills. Like you grew up with me, I wasn't like, I wasn't a salesperson.
Sure.
At all.
Yeah.
A little bit of weirdo, a little shy.
Yeah.
Kind of funny, maybe.
Yeah, you're funny.
I don't know.
You're funny.
But I didn't have the ability to like just go up and talk to anybody.
Right.
At all.
And that's something that kind of comes over time from doing this business, I think. You learn to talk to people because the people are your customers and your clients.
And unfortunately, that's like any business. Any business that you have, you kind of need to learn how to talk to people, how to sell, how to course, how to persuade,
right, and
how to put deals together, how to make win situations, and how to. There's so much out there to learn that they don't really teach you in college when it comes to business.
Yeah, and I would say like you said, like how to persuade people. Like the term I use is serve people. How do I serve people the best? Right. Same with all my businesses. Like, okay, how am I going to give you the best service so you come back to me more and more, and we continue to have a good relationship because it's all relationship based. Like. Who I am in my business is directly reflective on how much money I'm making. Yeah.
And serving is another skill. Serving is a skill. Persuading people is a skill. You don't need it as much if you're good at everything else.
Right.
Sometimes if you suck at all the other stuff, maybe persuasion is something you need the most help in. I don't know if that makes sense.
It does. And I mean, like, we're talking about the market and everything. One thing, like, this is kind of off track, but if you just find yourself in a slump and you're not able to figure anything out and you can't buy a house and you're kind of spinning your wheels, partnerships are just a great option. Not to buy like a primary house, but like, yes, they can be correct, but find the right partner for sure and find somebody who has the same like-minded goals as you and make sure you guys are crystal clear on everything. But I love partnering.
Yeah.
Like, and especially in real estate investment deals, I love partnering.
And if you're confused on how do I just go randomly get a partner, start going to meetups. There's multiple meetups every month in our local market where you can meet other people that want to invest in real estate too, or people that currently are, or maybe people that have full-time big jobs that make a lot of money and they just need somebody to help them run around and do things.
Yep.
It is possible. I'm not blowing smoke. It's totally possible to go out and find somebody at one of these meetings who just has a shit ton of money but no time, but they know that their money would be best in real estate, and that they know if they just had the right partner that did all the runaround work and found deals and managed properties and managed construction and can kind of handle everything, that somebody that they trust, there are people out there like them. I've seen them.
Yep.
I've seen Josh Cote has a guy.
Yep.
That will just like make him a partner,
Yeah.
and he's the daddy big bucks. He's got all the money, and Josh just has to go do the work.
Yep.
So if you want to stick in real estate, you can go find people like that. They do exist.
Yeah.
I wish there was a Tinder for this for real estate investors.
Time, money,
that are
and
looking for
experience, right? That's
Yeah.
kind of what people want: time, money, and experience. So if you have time and you're missing knowledge and experience, or time or money and experience, excuse me, like go find the money and experience.
Yeah. Hey, quick commercial break here. Thank you so much for listening to this podcast. I really do appreciate it. If you want to give back, let me help you buy a house, or I can help you sell a house. It's the only way I make money when I'm not investing in real estate. I don't make money on this podcast or the events I do, but I do make money only when I help people buy and sell houses. So if you're looking for your next investment and you're here in North Idaho, I want to help you personally. If you are not in North Idaho, I can still help you out. I have a vast network of referral partners all across the country, and I can find the right real estate investor savvy agent for you so you don't have to. It doesn't cost you a thing. Thank you for your support. Back to the show. It'd be cool if there was an app for real estate investors that are just looking for I'm the time guy. I've got time, or I'm the skill. I've got the experience guy, or I've got the money.
Yeah, yeah.
And you're just swiping left or right on like, yeah, I need money, guys. I need
There is an app like that. I can't remember what it's called.
Bigger Pockets. No,
Something like that. But you can just reach out to people and you really utilize your skills. What are you good at? And try to bring that to the table and try to provide value on whatever you're doing.
but what if you're like, gosh, I'm not good at anything?
Then
That you got to start somewhere.
Yep, you got to try to figure out how to get good at something.
Go to these meetings, just figure out how to buy something, and you do need money.
You do, yes.
Almost always. I know there's plenty of creative ways, and we've gone over so many podcasts where I've shown creative ways to buy money with little to no, or buy real estate with little to no money.
Yeah,
But you still kind of need some credit.
yeah,
I would highly recommend building up credit cards.
yeah.
Keeping your credit good. Using credit cards constantly and paying them down constantly. That way the credit limits grow. Don't ever be afraid to be turned down by banks and ask for loans.
Yep.
You may not need them right away, but it helps to prepare. And credit is as good as cash in the real estate industry.
Yeah, absolutely.
So like I've spent a lot of time right after I lost that house and went bankrupt and stuff and had to start over back in 2011-ish, 2012. I went out and got a Capital One credit card that I had to put $100 down to get like a $500 limit.
Oh, one of the secure ones? I had one of those when I was growing up.
I ended up getting two of those. And now I think the combined, they're actually was some of my lowest limit credit cards, but they helped me build up my credit.
Yep.
I think I've got about 15,000 or so, maybe 15 to 20 grand between those two. And then we've got other credit cards too that put us up over 100 grand of available credit. And I've got a business line of credit through Numerica Credit Union that I've had to ask for multiple times, got turned down a couple of times, and eventually they gave me a small amount. I used it a lot over a year, showed good history. Then they upped it to like 50 grand.
Yep.
So I've got an uncollateralized, unsecured business line of credit with Numerica that I was able to build up over time. And it's easier than saving money,
It is.
but it could be used on real estate and projects and things like that. So, but don't forget to save money too.
Right.
Whatever income you guys have out there, you need to be hacking off a good portion of it to use towards investments and savings. Like, I really like to try to save at least 30 to 50% of my income, and I like to throw it in different buckets.
Yep.
You know, Robert Kiyosaki teaches this. Do you do this too? I think you do something like this, right? A lot of your income, do you take a portion of your income.
Oh, yeah.
And move it to what do you do?
Mine goes I'm kind of in the saving phase right now, so I'm not actively buying real estate. I'm doing what you said, just getting my money straight. And before we get there, I just want to kind of touch on credit. Like Nick said, use your credit cards, but there's a formula to use your credit cards. Don't just max out your credit cards. That's not how you utilize it, right?
Unless you're prepared to pay them down immediately.
Right. But you want to keep your credit lines, from my understanding. Also, disclaimer: we're not attorneys. This is for educational value.
You don't need to be an attorney to talk about credit.
Okay, whatever. I don't want to tell people how to do it when it may not be applicable to them.
Okay, go ahead.
Keep your credit limit or your credit utilization in between 10 and 20%.
Yeah. Oh, if you want your scores to be high.
Yeah, and you want your scores to be high so you can get higher credit limits. Like it all kind of plays hand in hand.
But your credit score jumps all over the place if like you're using this, because I've had moments where I max out like almost all my credit cards.
Sure.
And my score goes way down.
Yep.
But then, you finish a real estate flip or something like that, and you're able to just pay all that stuff off, and then it's all available again. And then you see, like, the next month, your TransUnion score just goes, like, boom, in the 800s. And it's just... It's a game.
It is a game, but you've already got these credit lines established. I'm talking about for somebody who wants to establish these things.
You just got to start.
You got to start, correct?
Yeah.
But like utilizing your 10 to 15% will show that you are making monthly payments and you are responsible with the money. If you hit out the gate and you're 95% utilization, nobody's going to want to give you another credit card because your debt to income is going to be all fucked up.
Well, yeah, when you're applying, you always want to apply for credit when you don't need it.
Right, exactly.
And when you have low balances.
Yeah.
That's when they want to give it to you. X won't give it to you.
X won't give it to you. But I'm learning the hard way. So like I had all my credit cards paid off, Nick. And I thought that was the best thing. I'm like, cool, I've got all this credit available. Yeah. And now that I wasn't using these, 2 of my credit cards have actually canceled.
Ooh, which ones? That hasn't happened to me yet.
Which one was it? It was what's it called? Barclay card is an Apple card. And I have it was an eBay MasterCard that you can use for other things other than eBay.
Now, why would they do that?
Because I was not utilizing their credit.
How long did you let it sit idle?
More than a year, probably.
Oh, okay.
But anyway, what I was doing in my research is I was saying like you should probably use your credit cards every 3 months.
Okay. Probably a good idea.
And what I'm kind of implementing into my strategy is I'm just putting one subscription on one credit card that I already use.
Okay.
Like, so I'm not like going to get a new thing. Like we talked before the show, like Hulu, HBO, whatever is like $15 a month.
Yeah.
I put that on a credit card, and that's all I use that credit card for.
Okay.
So I have a $15 balance every month. As soon as the credit hits, I pay it off.
That's a good idea. So you put something reoccurring
on the card, so I don't have to like think about using.
So you don't think
card
about using it
and being like, oh, I should go buy a TV with this. I put something on there that I'm buying anyway.
Okay.
And that's how I'm going to keep my credit limits active.
Now, whenever you make big purchases, do you always use a credit card?
Sometimes.
Okay.
Yeah. And I've got a lot of different ways I kind of utilize this. One credit card I use, it gets me Bitcoin back every single time I use it.
Oh, you got a Coinbase card. How many credit cards do you have?
7.
Oh, boy. 6. Big boy credit card guy.
I try to use it. Anyway, rewards are a good thing if you use them like a debit card. So in this case, I have a Gemini credit card. I get anywhere between 1 to 3% back in Bitcoin whenever I use it. It's instantaneous. It doesn't have to wait until my billing cycle hits. So what I do is I'll go to the grocery store. I'll buy grocery stores $120, right?
Yeah.
So I'll spend $120 on my card. Instantly, I'll put $125 from my debit onto that credit card.
Nice.
So it's like I basically paid for the groceries and get the free reward.
Okay.
And that's how I utilize getting my credit. But what was the next question?
Well, that's what I was asking. Is just simply how to use. Well, actually, what do you do with the money that you get your income from your business? Do you take a certain percentage, or do you just, as you feel like it, do you usually invest a certain percentage of what you get?
It's a good question. So right now I'm W-2'd.
You pay yourself first.
I pay myself first, correct. Yeah, so first things first is I throw all my money into my different buckets, right? Excuse me. Every week it goes into Robinhood, it goes into my Ally, which is a high yield savings. It goes into another savings account that's more liquid.
Yep.
I end up saving about $900 a month just in all these buckets that's automatically thrown.
Okay.
And so as soon as my credit or my paycheck hits, all the companies are like, give me, and I don't have to think about it anymore.
Okay.
Yeah.
Got it.
So like I get paid and then like my savings eats my paycheck basically.
Yeah.
which is good. It's a good way for me to save.
How did your business do this year? We're almost out of wrap.
We are almost out of wrap. I'm right now at like 98,000 and some change.
I think your goal was to hit 100 grand this year, right? You're going to hit it.
I'm fully going to hit it.
You'll hit it this week, maybe.
This week's tough. This week,
Yeah, it's a holiday week, but
right. But like, and we've done deals as well. So that's just with my main photography business.
right, just your main photography
Yeah.
business. I know you wanted to hit 100K there while you had all these little side hustles going on.
Yep.
Which is kind of cool.
Yeah.
How's your wife's business doing?
It's good. With that, I mean, she just hired an employee and she's got a partner, so she's still trying to kind of work out the kinks of that.
Yeah.
But it seems like it's going to be an effective model for her.
Right on.
Yeah.
Where are you guys as far as being able to have the down payment to buy a rental property out of state? Because I think that was one of your goals, right?
Yeah, we're kind of far, and I mean, we're not a totally eye to eye on finances right now, unfortunately. A lot of her money's going back into her business, which is fine.
Yep.
I've got multiple buckets. I've got one bucket specifically saved for a next investment property that's got like $3,000 in it. It's not
Okay.
That's one bucket, but I've also got my 6-month savings going, my IRA for next year already all set up.
Yep.
Which is really cool.
Uh-huh.
So I saved $7,000 in a bank account.
Nice.
January 1st comes, I'm just going to throw that in my IRA. I'm like, cool. Now my 15's 22, and I can do more work with that.
Right on.
Yeah.
Cool.
So that's the plan with that.
So I'll give you a little sneak. What I've been doing, I've been playing the stock market, trying to grow my Robinhood account up to 40 grand. Once I get there, I'm pretty sure I want to take that money and buy a rental property.
Cool.
In the outskirts of Pittsburgh.
Cool. Okay.
For around 200 grand.
Okay.
So that would be about my down
Putting about
payment.
25% down. Yeah.
About 20, yeah, 20% or so.
Yeah.
So that's my goal, and I've been able to grow it this year from I think around 12 grand or so at the start of the year, something like that, and it's around 27,000 now.
Yeah.
And I made a move last night. I sold half my Tesla stocks again.
Yeah. Good.
Sold my Ford stocks, and I'm waiting for a dip somewhere where I can get back into the market and just kind of. I'd like to. The last few months, just sell when I think Tesla's high, half the stocks, and then buy back in when I think it's kind of at a lower.
Yeah.
Price
Do you set up
point.
automatic alerts on your?
No, I guess I could do all that.
You can.
Yeah,
I like to get alerts when a stock dips below a certain price or goes above a certain price.
yeah, and I did have it set. I had to. I always have like my Tesla buying. Ready to go when it hits like 178. I don't think it's going to hit that low anymore.
Yeah.
I think there's going to be a new low, like around 250 or so might be the new low.
Yeah,
that was the high.
I've got Bitcoin doing that. If it ever goes below 60K again, it's already like $250 or just like right into it.
But I'm also aware of Warren Buffett's been just sitting on cash, and he still thinks that there's this massive correction in the stock market coming. So I got to be aware of that. That guy's smarter than me.
Yep.
And just try to remember to imitate people that are smarter than you and what you want to do.
100%.
And I felt like, okay, now this buzz around the election, I feel like it's going to start dying off. I'm just guessing. My prediction is that the stock market might start eventually, and it's always irrational, but I'm guessing it's just going to cool off.
Yes, I would agree.
I don't know if it's going to really. What is it going to take for it to? What do you think it's going to take for the stock market to just start crashing?
I think it's going to take so much for it to start crashing, and the reason is like the prices are high everywhere.
Yeah.
Right. You've got high real estate prices, high groceries. Everyone complains about eggs and gas and everything. Right.
Yeah.
So while these prices are high, the stock for that company is going to be high as well. Mm-hmm. Does that make sense?
Yeah, because it's an asset.
Right, because it's an asset, and the asset's performing the way it wants to. And
if that company's profitable,
If
and
that company's
if investors, but the stock market is a little irrational.
Sure.
It's more based off people's feelings
Yeah, it
in
is.
general of what they want to be invested in, and a lot of it has control. The hedge funds have control of this too.
Sure.
But it's gonna be interesting. Mm-hmm. My guess is that it won't happen suddenly.
Sure.
And it'll be a slow and gradual decline.
Now,
Of people that are having to take their money out,
Right.
in order to pay for their living expenses.
Right. I try not to take my money out. I know you like to do the day trading, which is great. The way I kind of handle stocks.
Mine's more like a monthly trading.
Sure. Mine's
I make moves like monthly.
yeah. I kind of do a set it and forget it, honestly, and it's worked out pretty well. It's worked out decently well. over time, like if it follows a lot of the other consumer price indexes and all the other trends, like it'll just keep going up. The more money that's introduced, the more, stocks will have the ability to rise with it, if that makes sense.
Yeah.
Yeah. Yes and no, right? I mean, like
Yeah.
it's all, you don't control this company. You have no idea what happens.
But I'm so curious. What does Warren Buffett think?
I agree with you.
What does he think's going to happen? Why he's sitting on this much cash?
Sure. And I fully agree with you there. I think, like, you should really imitate the people who are smarter than you. I'm sitting on cash, too. Like, not all my money's in the stock market. In fact,
Yeah.
like, barely any of my money's in the stock market. But it's still something I want to make sure I'm paying attention to.
And it is something that, like, I almost always forget this, too. When things are hot and people think nothing can go wrong, is typically when things happen. And I feel like we're kind of in the zone when it comes to the stock market. We're in this zone where, like, people, like, don't anticipate like things going wrong. And that's usually like when people are greedy, get scared, get paranoid. And when people are scared, that's when we can get greedy. Anyway, that's my take on the stock market. I feel like maybe I should. I don't want to jump out completely, but I'm jumping. I'm like 75% out.
Yeah.
Most of it's just cash right now, sitting there.
Sure.
And I'm looking at this real estate, and I'm seeing price drops constantly. Like, look at this. In Kootenai, an eightplex went down from 850 to 795.
Okay.
I've
Yeah.
seen a lot of luxury properties over the last month or so constantly come down. Like, prices come down.
Luxury is a hard market for sure, though.
Yeah. And some of them aren't even super luxury anymore. It's just like homes that were worth $1 million a couple years ago are now worth $800,000.
Sure.
And that's a 20% dip. And people aren't really talking about that much.
Sure.
But it's interesting to see that what's actually happening in the market
Yeah.
is not really what people are talking about.
Right.
But if you were to look at, let's look at the last week in our MLS, we've had 74 new listings. Look at the price drops. 64.
74 or 64 out of 74?
No, 74 new listings, but 64 price drops.
Gotcha. Okay.
In the last week. And some of these price reductions are, let's see, this one's already expired. This one was listed for 1.225. They brought it down 25 grand. I guess we don't have to do this on air.
Sure.
Oh, that was $1 million. Now it's 100,000. That must be an error.
Right.
I think they meant to go from a 1.18 million to 999,000. They dropped it to $99,000. That's an error. You know what? We should buy it right now, or else it's false advertising.
Right.
It's a 4,000 square foot home in Kellogg. That's nice.
I'll go in with that. You're paying back my IRA. I think today we'll just redeploy it.
Here's something interesting. This is interesting. This is something. Okay, Lennar. I was part of this subdivision. Lennar is selling townhomes. They originally listed these 3-bedroom, 2.5 bath, 1,900 square feet properties in October for $444,950. Now they offer incentives and stuff like that to try to attract buyers.
Sure.
They actually dropped the price.
Wow.
They dropped the price to $437,900. You know what that means? They've dropped the price on all of their properties. They have 38 of those to sell.
So this is part of the subdivision you were a part of.
Yeah.
Okay.
So they've had to drop this. I know it sounds small, $7,000.
Yeah, I
But
was gonna
what
say
is
$7,000
times 38? You know, because now all of
210,000 or something like
their appraisals are going to be affected. But they felt like they couldn't offer enough incentives. They eventually have to start dropping the price because they're not getting enough action. And this is a very large. Yeah, so that's a $266,000 price drop in their small subdivision on their half a block.
Right.
And that's just a $7,000 move. And
You cashed out pretty good on that one, I think.
Yeah, I did. I kind of feel bad for him now. Oh, I lost my screen. Anyway, here it is. Just looking at all the price drops, and like we had this really nice, beautiful new construction home on Orchard that was initially listed at $950.
Yeah.
And I knew that it would sell for closer to $875 back. This was in the late spring, early summer.
Yeah.
And I really recommended, like, I think we should be in the, upper eights.
Right.
Like 875 is, I think, where it's going to sell. And I got a lot of feedback too from other agents saying that same thing.
Sure.
But they wanted to list high. They listed at 950, didn't work.
Yep.
We dropped to 925, didn't work. Kept dropping, and then we're at 850 after the summer ended in the fall, like about a month ago.
Okay.
It drove a lot of showings, but still no offers. Now we're down to 839.
Okay.
And no action.
Yeah.
Now, I mean, we did just have Thanksgiving, and there's plenty of excuses, but
Right.
we're seeing price reductions still in 2024. Like prices that are below what they should have sold for based off comps.
Right.
So we're seeing the market come down gradually.
Right. I don't think it's going to be like a drop off the cliff thing for either stocks or real estate. I think it's going to be a slow burn either way. And that's kind of how market trends go. They're rarely do they just skyrocket or just fall off a cliff. Like COVID was one thing where, prices just skyrocketed. That was very fast.
Yeah.
But now it's kind of more of a normalcy. Nothing has impacted the world enough where it does that.
Yep. Here's another newer construction home right nearby in Okanagan. They listed at 898, and now it's down to 824.
Wild.
Here's another new construction. Now, this is a different builder. No, I'm sorry. This is Lennar. Lennar's dropping their prices. Lennar's the second largest home builder in the country.
Okay.
They're dropping their prices.
Who's the first largest?
D.R. Horton.
Oh, okay.
And they want to I had a meeting with them a week ago because they're looking at the new subdivision that I am working on. And I had a meeting with a couple of their acquisition managers that came into my office, and we were talking, and they want to be a 30%. They want 30% of the market share in North Idaho.
Wow.
And they're buying whatever somebody will give them.
Yeah.
And not many people are working with them because they're so used to working with like the Hayden Homes and the Vikings and like the other people. But it's interesting to see that where are the opportunities. Maybe get into land development out there, guys. Like there's some hungry home builders out there that are willing to still drop their prices, but new construction home drop in prices is very rare.
Sure. Yeah.
It's because what it does is it affects all their properties, all their appraised values, and they have pissed off people that they just sold homes to or that they're under contract with, and now they're seeing the house that they already have is now less.
Yep. Very rarely, like you said, that happens.
It's very rare. And honestly, I haven't seen this. This is new to me right now. Looking at this, I'm always looking at price reductions.
Sure.
But it is so rare for me to see big, large new construction bigger home builders that are used to pricing correctly.
Yeah.
They're not, they price where they know they should sell them.
And where they do sell.
And where they do sell.
Right.
But they're not selling.
Well,
and they're dropping their prices.
That's very interesting. Like, again, when we bought our personal primary house, it was $303,000. As soon as we bought it, like 3 weeks later, prices went up. And we had instant equity because prices were on the rise. But very rarely, like you said, like I have never seen this where a new construction builder is reducing the price of their inventory.
Right. So I want to show you something else here too.
Okay.
2024. Oh, I'm looking at multifamily. Sorry. Go back here.
And a lot of what you were looking at, but while you're searching this, you were kind of looking in the luxury market, which is it's a tough price point to be in. But you were looking at the new construction as well.
I just went to price drops in general.
Okay, a lot of that was your $1 million houses and above, or in that area, which is above the median price point in Coeur d'Alene, which. It is a harder place. You won't find as much activity in the luxury department, or your inventory typically sits a little bit longer just because you have to find the right buyer, not anyone willing to get in.
Yeah. Here's North Idaho new construction. So active, what you have available right now, built in 2024 or later. Now, this does include pre-ghost listings, like things that they haven't built yet.
Right, okay.
But there's 350 that are showing active, and you have 286 pending. So new construction is still dominating the market, but and they're having lots of action, but they also are dropping their prices.
Right.
So something to be aware of, guys, that just hold your horses, make money. If real estate's still stressing you out, you just can't make it work, don't worry, you can eventually make it work. Keep hunting for deals. But get a side hustle if you don't have one.
Yeah.
Start a business, start making money.
Absolutely.
The interest rates are making things very hard to cash flow if you want to play the rental game. If you want to play the flip game, that doesn't matter as much, but just make sure that you're getting into a market where it's easier to resell.
Right.
Look at the TMO reports and see at what price ranges I should be at to where it's not going to sit on the market forever.
How can somebody get those TMO reports?
I can send them to them.
Okay.
So you guys can reach out to me directly. My email is nickbeveridge17@gmail.com.
Yeah. That wasn't even a plug for you, but I'm glad that
Yeah.
like you can do that. You can do it in Idaho, and can you do it in any place or just Idaho?
I can just do it in North Idaho, but I've got hookups for
Yeah,
if
yeah.
you're in Spokane. Yvette Wiley can get the stuff to you.
Yeah.
Because she's at Keller Williams.
Sure. But you can
And,
really get in touch with any real
yeah.
estate agent in the country.
There's different
and,
reports.
and you can figure it out. So if you're trying to buy something, like just get in touch with Nick and see how he can help you. Really. And what you're saying, like I do want to kind of stress this. Like if you're finding yourself where you're not in a position to buy, get yourself in a position to buy.
Yes, get yourself there.
Right. And
Gotta
it's
force
such easy advice, like don't spend money on stupid shit. Save, like actually have a savings. And we've talked about this on past episodes. Like the amount of people who don't have $5,000 in their bank account is staggering.
The amount of people that don't have $400 in their bank account is more than half of the country.
That's insane.
Yes. And if you're listening to this, that's probably not you.
Right.
But if it is you, let's get you out of there.
Yeah. If it is you, like you take your small steps. If your credit's crap, get it right. Find a combination of saving and paying off your debts, whatever that combination is good for you, and really try to dig yourself out of this hole because it's really hard once you're in that hole, I will say.
Yeah.
And we've both been there. So.
Oh, yeah. So just remember that you got to be on the hunt for great deals. Great deals typically aren't advertised. You got to make them or find them elsewhere. You got to look under rocks.
Yep.
What you see on the MLS is all the crap nobody wants.
Yep.
But
As an
maybe,
investment, I will
but
say.
it doesn't necessarily mean that the price that's advertised is what they'll take because you're seeing lots of price drops, heavy price drops. We're getting into a very optimistic. I believe it's a wonderful season. To go shopping.
Yeah.
Because if you can find a fix and flip or something in a market where it's hard and the sellers are more motivated because there's not as much going on during the holidays, and then you can start that fix and flip, in the spring, and then sell during that hot, summertime. That's never a bad thing.
Yeah. And I will say, like, obviously, if you're looking for deals on the MLS, like you said, that's basically where all the crap is. But what I would say...
But there are gems in that crap.
Yeah, yeah.
Like Joe Turner always finds a deal on the MLS.
She's incredible at it. She's a wizard at finding crap on the MLS. But
Yeah.
and turning it into
and we
gold.
just saw a couple deals on the MLS. There was an eightplex, too, in Kootenai that just dropped its price to $795.
And that'll be a commercial loan. That wouldn't be a residential one. So that's a completely different
and commercial
ballgame.
loans are easier to get.
Yep, especially if if it already has renters in it or anything like that, it's almost cakewalk. But like what I was going to say about that is, make sure if you are looking at deals either on Zillow or Redfin or whatever, just talk with a real estate agent, get in touch with them, because a lot of times they can get you the data as to how long it's been on market, if they're willing to accept any lower offers. Just get a real estate liaison agent who can kind of facilitate that deal for you. Don't try to do it yourself.
You said that well.
Negotiations are important in this time because, people, I know we're getting close, but people get desperate and people want to sell their house. And if it's overpriced, they may be willing to take a different price or different terms.
Yeah.
And just have your real estate agent reach out to them and see what kind of deals can be made.
Yeah. Oh, and look for also, if you qualify for a normal loan, FHA loans and VA loans are assumable.
Yep.
So always ask whatever house you're looking at, see if you can get your agent to call the other agent and just ask them, hey, is this loan that they have, do they have a loan against it? Is it by chance an FHA or a VA that they can assume?
Yeah.
If you do a little digging, there are about a quarter of the loans out there are FHA or VA.
Yeah.
And more than half of the properties that are on the MLS have loans against them. So there's like a 2 in 10 chance that you might be able to assume a mortgage that's not advertised.
Yeah.
You just got to ask.
Yep.
And it's not a bad thing for the seller. Like when you assume a mortgage, it's not like sub 2.
Right.
Like you have to qualify through their bank and just take over their current interest rate and their current mortgage payment. Way better than creating a new one that's double the price.
Yeah. And worst case scenario, I don't think this is really viable in a lot of MLS properties, but you can ask your real estate agent if there's seller financing options available, if there is a loan on the property, and if they are willing to take terms.
Yes. And before we go, I just want to show you that there is a filter.
I was like, there is a field on the MLS, but not
for assumable.
right. But not all of them that say assumable or like everything.
Right.
You could still ask, even though it's not an option, if that makes sense.
And so if we look at, there are 6 properties right now that the agent actually took an extra step to ask their seller, do you have an assumable loan? And let's make sure that we put that in the terms and conditions. And there's a property in Post Falls right now in Glacier Peak.
I took the photos of that one.
Did you? Okay. It's a 3-bedroom, 2-bath, 1,000 square feet, $385,000. It says that there is an assumable option on here. Does it say anything in the private remarks about it? It does not. Let's see. Does it say anything here?
It's been on the market about 4 months, it looks like.
So you just have to ask.
Yep.
Let's look at the documents. It doesn't say anything there, but they did check the box, so it's worth asking.
Yep.
I mean, let's see when they purchased this property. They bought it in 2022. So in
370.
so maybe it's a higher interest rate. It was back in September of 22, but that will tell you that it's at least an option. It's worth checking into. Ask them what the payment is, what the interest rate is. Maybe it's worth taking over than getting something new.
Yeah.
You never know. There is a property in Bonners Ferry if you guys live out there. This one's been on and off the market for a long time, but it's got an assumable VA loan with a super low interest rate. It's a 2-bedroom, 1-bath house.
I
It's all
talked to you about this one, about buying it one time with you.
Yeah. So if you can qualify for this one, super low payment. You just pay the difference between what they owe and what the price is.
Yeah.
The price is $285, and
I can't remember what he owes on it.
I can't remember, but
it wasn't like
not
the best
much more.
Deal. Yeah, there wasn't a lot of skin on that one.
But they have. I mean, it's definitely worth checking into.
Sure,
especially if you live up there.
Yep.
Yeah.
Or using it as a rental, right? I mean, you don't have to live in the thing. You can.
True that.
There's a lot of different options. You just gotta dig a little bit, and like Nick said, you gotta look under some rocks to maybe find the gem you're looking for.
All right, I think we should get out of here.
I don't think so. I want to talk forever.
Okay.
Okay.
Should we get back into your mom talk?
Yeah, that's great.
Just kidding.
So wait, if you enjoyed this episode, please leave us a comment or a like on YouTube. We love that stuff. Thank you so much. If you're listening live, thank you. Welcome. You can find out more of our episodes at The Investor Shed on YouTube or on Spotify or Apple Podcasts. Any other plugs you want?
No. Make sure you just hit us up if you need an agent in North Idaho. We're back at it, baby.
Yeah. If you need an agent or if you need hard money, let's freaking talk, man.
Yeah, love to help you out.
Yeah.
So thanks for listening. Please don't forget to don't subscribe. We've actually had our we're very proud of this. Last month in November, we've had an 81% reduction in audio downloads. And that tells us that we're doing a wonderful job of pissing people off and having less listeners. And I'm just really proud of that. So hopefully next month we can get a report that's even less people listening.
I really hope it goes the opposite way. I love when people listen and like when they tell us that we're doing a good job. But if you want less listeners, let's see what we can do.
Yeah. Well, we got a niche crowd here.
We do got a niche crowd.
Right. Thanks, guys. Talk to you later.
Bye.
Bye.
Thank you so much for checking out the Investor Shed podcast. If you enjoyed your time, make sure to leave a 5-star rating and review on Apple Podcasts and Spotify. Follow along on YouTube, TikTok, and Instagram at The Investor Shed for shorts and promos about each episode. Do you want to be a guest or know someone who has great real estate investing advice and stories? Reach out to us at theinvestorshed@gmail.com.